E-mini S&Ps rally today to make yet another new all-time high, printing as high as 6111. That makes it just slightly higher than yesterday's new all-time high. But again, we saw stocks moving higher today after the jobs number, which came in moderately stronger than expected. However, the unemployment rate was higher, and that in turn kept rate cuts on the table. We are now pricing in about 85% odds that they cut rates later this month. That's up from about 70% earlier in the week. So after today's jobs numbers, more rate cuts coming, at least priced by the Fed Fund futures, and that helping to push equities higher again, seeing stocks move higher, a new all-time high at 6111, and then closing back closer to 6100. Now, what does this mean for volatility? Well, as we've talked about, the indices move higher, volatility moves lower, but when you add in the fact that we had the unemployment numbers today, or the jobs report today, that event risk being pushed past, we saw volatility moving down to the lowest we've seen since July of earlier this year. Lastly, let's talk about what we have next week. Next week, things don't slow down at all. We get more rate cut indicative data in the CPI and PPI, so the Fed will be obviously very closely watching that. We do continue to get small bits of earnings out. Earnings season's still here, even though we're not seeing the big names that we saw a few weeks ago. But one thing we won't hear from is the Federal Reserve speakers, which have been out and about over the last week or so as we enter into the blackout period ahead of December FOMC. So equity markets rally. E-minis make yet another new all-time high, closing at near 6,100 ahead of next week's CPI, PPI, and more earnings.